So 2 days ago we talked about a decisive trend line that will determine the direction of the entirety of financial markets, entirety of financial markets, and in as much as it may seem like a personal view, it's important to note that ignoring this uh, trend line, which we discovered, uh, which has been very, 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 very effective for the entirety of this year, would be if you ignore this trend line, it's going to be at your own peril, and I'm going to be showing you just why. It's your boy Pedro again, so welcome again to Crypto Reality channel. And I'm going to be laying today's broadcast is going to be a very, very short broadcast, and I'm just going to be laying emphasis. I'm going to be focusing on the trend line we talked about 2 days ago on the DXY charts, and I'm just going to be showing you why this trend line has proved us right once again, that it's a very decisive trend line. And so as at Sunday we were here on Sunday, the close of last week, which was on Friday. This was the last candle as at the last broadcast, and in as much as this may seem like a coincidence, it would be very, 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 very ignoring this coincidence may be at your own peril if you are enthusiastic about the state of things in the market. You can see that the DXY, yesterday's close was just right on this trend line. I mean, this is like inch perfect coincidence, if you must call it. The market closed right on this trend line, and you can see currently that the market is currently trying to bounce off this trend line. So we are currently finding support, and it may interest you to know that the support is coincidentally on this trend line. Maybe you may be wondering why we're currently finding support at a level that does not really seem like a significant level in the market, a key level in the market. But it would interest you to know that the trend line we laid emphasis on the last broadcast just a couple of days back is the trend line that is currently finding it is the trend line where the market is currently finding support, and that is why things are as they currently are in the market. So I'm just going to be focusing on giving you a little bit of in-depth analysis again. I'm going to be showing you more reasons why this trend line is important as to where the market is going to be, and why I think the trend may likely reverse with the current state of things. If this trend that has been in play since the since the beginning of this trend line, if this trend should continue, if this trend gets invalidated, then we may likely see a reversal for the DXY, and that would be positive news for the rest of the market. So I'm going to be taking you down to the very first I'm taking you down memory lane back to where this trend line was formed. It's around February 10th, February 10th. So here is, I hope this is clear enough. I can't get rid of all these lines. I would have used another chart, but this is the one that explains it, that gets its pinpoint. This is the pinpoint accurate charts that I can use, so you need to bear with me, but try as much as possible to follow You can check it out on your own chart as well. This is February 10th, the very first time when we initiated this trend line. We had a revisit to this trend line back in February 21st, which is basically a period where the market was still consolidating via a retracement of a last swing high in January 28th. So this doesn't really count. So we just assume that okay, the trend line was formed in February, and it took off. We took off from that trend line in February. Anytime we bounce off, there's a pattern. There's been a repetitive pattern around this trend line. Anytime we take off, we bounce off after retracement off this trend line. We always form the new higher high, and then we found a way. After forming a new higher high, we formed a new higher high on March 7th, and then we found that we consolidated after that period, which is consolidation is usually retracement is usually a period of consolidation. So because it's a period where you are not actually forming higher highs or higher lows, or lower lows and lower highs, as the case may be, whatever trend it is you're dealing with. So it's actually a period of retracement is usually a period of consolidation. So that was the case from March 7th until we tend to revisit. We revisited this trend line again on March 30th, and immediately we bounced off March 31st, formed a new higher high again on Thursday, April 28th, and then we kind of consolidated a bit, shifted the higher high again on May 12th, after which we consolidated again or retraced back to this trend line again on May 30th. We took off immediately again, formed a new higher high. We usually form one higher high and then the higher high again, if I must use that word. So the main one that counts, I would just classify this as part of the consolidation. The next higher high was on July 14th, after which we consolidated and retraced again, and we revisited this again on August 10th, and we took off almost immediately again, and the latest higher high is where we are, September 28th, and after which we in as much as the last broadcast I said we are experiencing lower highs and lower lows from the markets. This I want to correct that. I think this is more like consolidation, retracement of the current swing high, and in as much as it is technically lower highs and lower low, it's giving the current trend from the markets. This seems more like a retracement and or consolidation from the markets of this higher high. So that is what we're currently experiencing in the market. It seems more pronounced. The consolidation seems more pronounced, forming seems bigger, mega, and then forming higher highs and higher lows. So it seems more like it, but it's more like a bull flag, like people will say it. It's more like retracement and consolidation. So that has been the case since 28 September, and somehow the market tends to, even when you feel like the market has finished its consolidation, it tends to find its way, even when you feel the market has finished retracing without touching the bottom of the touching this trend line, it finds its way to touch this trend line before taking off again. And once again, that has been the case we have finally touched this trend line. We did that on 27th October, which was almost a couple of weeks back. And normally you would expect from the current trend, once we have this revisits, the normal trend is to the prevalent trend. What has always been prevalent is a bounce off and the formation of a new higher high, which is a continuation of the uptrend for the DXY. But for the very first time, we're seeing a change in that trend, that underlying trend. We're currently seeing we're seeing weakness. You can see very well as this was demonstrated in last week Friday's close, when we just thought we're on a new impulse run to form a new higher high. This happened around this resistance, this horizontal level. So that is a change in the trend that has been the case for the DXY ever since, for the past 9 months now. This makes it exactly 9 months, since from February 10th. Today is November 8th, so that is exactly 9 months as things stand. So you can see clearly that. And secondly, I want to show you, I want to also demonstrate with the amount of time it takes to revisit this trend line. That is another very important factor we should be looking at, given that we started this, this trend line commenced on February 10th. It was initiated on February 10th, was given birth on February 10th, and we took off on February 21st, and a revisit to this trend line and happened on March 30th, which is over a month, and the next visit came on May 30th, which is exactly 2 months later. March 30th to May 30th, exactly 2 months. So 2 months. The next visit came in came on August 10th, which is over 2 months, almost getting to like around 2.5 months thereabouts. We took off on from August 30th, so we're having 2 months, over 2 months. It's taking a little bit of so we had exactly 2 months, and then we had 2 months plus, which is a positive sign. The longer it takes to get return to retest, the better it is for the DXY, for the whatever uptrend or whatever for the uptrend, for the trend basically. The longer it takes to revisit, the better it is for the trend. And then the next visit after August 10th was 27th October, which is the latest, which is the second to the last visit rather, and that's a period of over 2 months, roughly 2.5 months too, I think, about 2.5 months as well. And then for this trend to continue, we're expecting something within 2 months, 2.5 months, because that has been the prevalent or the underlying trend. The time taken for a revisit has been 2 months, 2 months, 2 months plus, and then we're currently seeing the next visits coming on November 7th, which was just yesterday, which is less than 2 weeks. That's around 10 days, about 10 days, or 11 days. So it has taken 11 days to revisit this trend line, and that is a slow sign. It is too early to say. The market can still very well bounce off here and form a new higher high, and that would mean strength for the US dollar, and that would mean continuous disaster for the rest of the market. But this is an early sign. This is an early sign that things are gradually beginning to change from the massive bullish trend from the DXY, and you can clearly see that markets are beginning to react. You can see the Euro USD. This is also this what seems to be like higher highs and higher lows is basically consolidation as well. This is because this is not a pronounced higher high and higher low. So this is basically the market in a sideways state. Basically diagonal sideways state. It is not maybe it's not horizontal sideways movement. It's basically diagonal sideways or range. This is diagonal range from the Euro USD, which is usually a mirrored version of the DXY. So you can clearly see that markets are currently in that state, awaiting what this trend line, what holds, what this trend line has in stock for the markets before we can see something serious. So today's close is gonna be pivotal. Today's close, we're gonna see, it's too early, it's still very early. This is merely 10 a.m. Eastern, so the market is still very young. The day is still very young. As to, we may see maybe a bullish engulfing candle here that may send the market to that may just set the market on course to achieve a new higher high, which would mean that the rest of the market will just keep on struggling. But if that is not the case, if the market breaks this trend line, closes below it, and at least on a daily basis, and better still on a weekly basis, and then if this trend line flips back to resistance on daily and weekly closing basis, then that would mean a joyous state for the rest of the market. What I feel, I think that the market will just consolidate here, will be indecisive for the time being, and then after a while make a decision. We can see clearly we're already having that indecisiveness from smaller time frame. This is the 1 hour time frame. We can currently see that the market is struggling to do anything serious at the 1 hour time frame. The 4 hour time frame as well, the market is very indecisive as to what's next to do. And I said in the last broadcast that so long as this trend line keeps on holding as support, markets are just basically going to consolidate, and that has been the case so far. You can see that the market has been sideways from this is the Euro USD, here is the SPX, the stocks. This is taking a little bit of time. Stocks, the USD CHF. Internet is a bit slow, so okay, but you can see that here's the Bitcoin charts. We're currently still in that consolidation mode. We are just off 21k, and we're back. We're trying to head back to the bottom side again of this consolidation. We're still within this box. Nothing serious has really happened on the Bitcoin chart. Let me see if I can pull off this chart for USDCHF. Fortunately, this is not coming off, but if you check that, you see that the other markets are also very indecisive at the moment, because this trend line is once again proving pivotal. So I hope you got value from this, and if you did, please let me know in the comment section. Always endeavor to please feel free to like, share, and subscribe to this as well. And remember, as usual, that this is for educational purpose and not to be treated as financial advice. Trading financial market is a risky affair, so always endeavor to carry out your own research before entering any trade. So this is the bit for me today. Watch out for this trend line. It's proving pivotal, and it's gonna continue to prove pivotal as to where the market is going to head. So thank you very much. Do have a lovely trading week ahead. Bye bye.